This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
Here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall, during yesterday's report, I was mentioning that prices were right down next to the support level here, just beneath that 88 figure. I mentioned how we might look to enter with a stop just beneath the low of this candle right here, or exit on a daily close beneath the level, and that's what happened here. Prices did close beneath. I did exit this trade with a small loss around the 87.43 area. Moving forward now, I really don't like anything at this particular time. What I would like to see possibly over the next 24 to 48 hours is the previous support line, which is about the 87.56 area, act as future resistance, and that's what I would like to see during today's open candle, the candle that just opened about an hour or so ago. Confirm that the previous support line is acting as resistance, and that might set up a short trade for tomorrow's report. The next chart is the Aussie Kiwi. As I mentioned during yesterday's report, we might look to enter the trade short based on this doji here, placing our stop just above that 29.35 high of the doji candle, and we can see the prices are selling off a little bit over the past two sessions here, right now at about 27.60. So if you did enter that short trade, or if you're still in the short trade that was initially entered here based on the doji candle, I would continue to hold that short trade, and again, keep that stop just above that 129.35 high. The next chart is the Pound Swiss. Not much has changed here. The rally continues, but again, I'm still just waiting for prices to come down and touch the longer term support line formed by the late 2008 low. Excuse me, I kind of moved the line there by accident, and also the mid-March low right here. So we can keep that on the radar screen, but it could be a few days or maybe even a little more before that occurs, as prices are a little bit far away from that potential trade setup. The last chart is the Euro Swiss, and this we can see the sideways price action continues after that large rally, and this, in my opinion, is just a continuation pattern, and prices should break out to the upside eventually and test the longer term resistance line. As I mentioned during yesterday's report, we have a clear range obviously forming here in the short term. I mentioned that the 51.73 area could be the upper zone of that range, and just beneath, actually just above, excuse me, the 150 figure could be the bottom of the range. So as I was mentioning before, in my opinion, I expect an upside breakout here. So I might have a short bearish bias as a very short-term trader here, using these highs as resistance. But I would also be aware and sort of lean towards an eventual upside breakout again to test the longer-term resistance line located right now near the 153 figure. So those are the things that we can keep in mind now. Short-term trader might look to short the pair with a stop maybe just above that 52 figure, and then a longer-term trader might either wait for prices to break out, wait for the close above the breakout level, so maybe above that 52 figure, then enter for the trade up to that resistance line. And when that happens, that would be a short trade, and we'd look to enter just beneath the resistance line, maybe at the resistance line with a stop maybe 50 to 75 pips above the resistance line. Again, these are two separate areas, and it's a critical point to understand here that this is the long-term line, and the area that I was speaking about before, just beneath that 52 figure, is a very short-term line. And when you're doing short-term analysis, you have to be extremely flexible. You have to be able to abandon your trade ideas very, very fast if evidence to the contrary arises. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.